Yeah, at the beginning of this year, we made a conscious decision to focus on quality of loans as opposed to quantity of loans to make sure that we're meeting the needs of our members in a unique way so that we can be there as this dislocation happens in interest rates to help them get their money right. Ultimately, our goal is to help them achieve financial independence, and that means they want to have enough money to do what they want, buying a house, having children, retiring early, or changing careers. And we don't want any of that experience to be disrupted because of volatility of the marketplace. So we want to be there for their needs when they're making decisions around uncertainty.
So presumably, in doing so, you sacrificed a little bit on the volume side in order to get a higher quality of loans for your customers. Are you seeing the opposite to be true as well, where customers are kind of paring back their exposure to debt in order to kind of account for some of the interest rate rises and the potential for even more in the future?
Interestingly enough, periods like this that are discontinuous in terms of credit rates increasing creates an opportunity in two ways. People are reevaluating what they want to do, whether it's their SoFi Money account versus their current checking or banking account, or their current lending, or their current interest rate on credit cards. That creates opportunity for us to uniquely meet their needs. In addition to that, many of the current consumer services companies pull back. And when they pull back, that gets an opportunity to step forward.
Now, you all, and as CEO, you've been looking to diversify the business and get into areas like wealth management, holding deposits, trading individual stocks, and even cryptocurrency. What's it like trying to turn this business toward a more diversified model as you see some of this volatility in the marketplace, especially with some of the competitors like Bank of America that are doing similar things, or TD Ameritrade?
We're in a mission, and it's quite exhilarating. We want to help people borrow, save, spend, invest, and protect to get their money right. And so, importantly, we're now in the savings and spending business with SoFi Money. You can earn interest 2%, up to 2% on your deposits. You can also use an ATM card and debit card with no fees, do person-to-person payments, all from your SoFi app using SoFi Money. And we'll soon introduce single stock and cryptocurrency, as you mentioned. We want investors to have a broad range of options to meet their needs throughout their entire life cycle, including times like now that are discontinuous and create uncertainty. Now,
the bread and butter of SoFi is really student lending, refinancing student loans and so forth. The Fed had numbers showing that $1.5 trillion in outstanding loans are out there for student debt. Are you seeing students willing to take on more debt in other areas like a mortgage or personal loans?
What we're seeing is still heavy demand for people wanting to refinance their student loan to take advantage of the fact that they've improved their credit rating since they were given that loan, which will give them a better interest rate. We also are seeing people consolidate their unsecured personal lending, whether it's credit cards or other forms of debt, into personal loans. The mortgage business, with rising rates, that business is not going to be as active, but we want to still be there for our members to serve their needs, because that's a big, important financial decision that they're going to make. And I also think when the markets pull back, people evaluate, where am I putting my money from an investment standpoint? If they're not invested, maybe taking an opportunity to pull back. If they are invested, recognizing the fact they need to diversify more.